Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Happy Wednesday, everybody. There are two big things we need to discuss today. One is with mainland China and Hong Kong markets. The other, which we will cover first, is related to Hong Kong. As we have been anticipating for some time now, Hong Kong officially is now going to pass Article 23. Yesterday, Tuesday, Hong Kong's Special Administrative Region Chief Executive John Lee announced a 4-week consultation period for Hong Kong's homegrown security law, not to be confused with the Beijing-imposed one in 2020, known locally as Article 23, expressing, quote, "The legislation of Article 23 is necessary and must be done. It should be done as soon as possible. This is the constitutional responsibility of Hong Kong. Our consultation paper is very thorough. The community has reached a consensus on the legislation of Article 23. We should establish the law as soon as possible." End quote. Adding in a later statement, quote, "This is a law that tells people not to attack us. This is, in a way, a defensive law." End quote. And further expressing, quote, "Foreign intelligence organizations, the CIA, the British intelligence agencies have publicly stated that they're doing a lot of work against China and Hong Kong. Internally, the city is still facing the seed of unrest. This law is to protect us from attacks by foreign forces and by foreign countries." End quote. The new legislation would cover treason, insurrection, theft of state secrets, sabotage against public infrastructure, including computer systems, and external interference in domestic affairs. Analysts warn these tightenings would further curb civil freedoms in the city and damage its status as an international financial hub. According to the consultation paper, the crime of external interference targets acts, quote, "with intent to bring about an interference effect, collaborating with an external force," end quote, "to interfere in elections, forming or excluding government policies, or any conduct, quote, undermining the relationship," end quote, "between Hong Kong and Beijing." The document lists examples of external interference as that which has, quote, "exceeded the acceptable limit," end quote, of, quote, "genuine criticisms against government policies, legitimate lobbying work, general policy research, normal exchanges with overseas organizations, or day-to-day commercial activities," end quote, as, quote, "normal international practice," end quote. Of course, the Beijing-appointed Special National Security Court will define terms like acceptable limit, genuine criticisms, and normal international practice. The consultation paper also suggests that certain provisions will be subject to extraterritorial applications. Patrick Poon, a visiting researcher at the University of Tokyo, an expert on human rights, speaking to Japanese financial media outlet Nikkei Asia this week, said the proposed legislation for the 5 crimes is broadly defined and captures, quote, "all kinds of activities," end quote, including engagement with foreign entities about Hong Kong politics, adding, quote, "theft of state secrets is similar to the mainland charge of leaking state secrets to foreign entities," end quote. Article 23 of Hong Kong's founding legal document, known as the Basic Law, required it to write its own national security code after the territory was handed over from the UK to China in 1997. An attempt in 2003 led to public outcry and the city's largest protest at the time, with an estimated 500,000 people taking to the streets. At the time, the government ultimately backed down. As we know, though, there will likely be no mass protests this time. The policing and surveillance infrastructure has now been built up to prevent it. Of course, in the mainland, state media is trumpeting this move, with state-run Xinhua writing, quote, "As Hong Kong has gone through the Hong Kong version of a colour revolution in 2019, people all understand the importance of national security, and that risks to national security are serious, real, and can be unexpected. Also, as the geopolitical situation is getting more complicated, Hong Kong must remedy this shortcoming as soon as possible." End quote. State-run Global Times writes in a special editorial, quote, "It has been over 26 years since Hong Kong's return to the motherland, and the Basic Law has been in effect for more than 26 years. However, the legislation of Article 23 has remained unresolved. To distinguish patriots who love both the country and Hong Kong from anti-China and destabilizing forces, there is a very intuitive criterion: the attitude towards the legislation of Article 23. While initially some individuals might have had concerns and misunderstandings due to insufficient understanding of the legislation of Article 23, as well as the internal and external situation in Hong Kong, these cognitive problems should now be resolved. End quote. Hong Kong outlet The Hong Kong Free Press writes in a piece called "New Hong Kong Security Law Seeks to Define State Secrets Along China Line" that the city's authorities' proposed and existing laws should be, quote, improved, end quote, to include the term, quote, state secrets, end quote, in order to effectively outlaw unauthorized disclosure of confidential information which may endanger national security, such as that relating to major policy decisions, diplomatic affairs, and social economic development. Quote, "The wording of the proposed definition was almost identical to that in China's law on guarding state secrets, which Beijing sought to overhaul last year to expand its scope." End quote. Of course, none of this will help with Hong Kong's already shaky status as an international financial and business hub. The very same day as this Article 23 announcement, the American Chamber of Commerce in Hong Kong, AmCham, released its 2024 Members Business Sentiment Survey findings report. 1 year after Hong Kong reopened post-COVID, the survey shows that members, quote, continue to worry about US-China relations and overseas perception of Hong Kong, end quote. Because of this and a slower Hong Kong economic recovery, as well as China's own performance regarding the economy, quote, 26% of respondents reported that they were pessimistic about the business outlook for the next 12 months. 60% surveyed companies were adopting a staying-put approach in their investment and hiring plans for 2024, end quote. In terms of its position as an international business hub, 76% of respondents viewed Hong Kong as highly competitive or competitive thanks to its attributes: international connectivity, free flow of capital, a low and simple tax system, legal and regulatory system, free flow of information data, gateway in and out of China, as well as infrastructure and transportation links. However, the cost of living, including housing, cost of doing business, and talent availability were the top business factors that hurt Hong Kong's competitiveness. 41% of respondents said the availability of qualified staff in Hong Kong had decreased in the past year, and the national security law was one factor in this exodus of qualified staff. Over 30% of companies said their operations had been negatively impacted by the national security law. 2/3 of respondents to the annual business survey said that they thought reduced rhetoric about both the US and Hong Kong on the topic of national security would help improve relations. Next up, China's stock market woes continue. But just quickly, if you enjoyed today's episode, I have a huge favor to ask. That is to like and subscribe. This helps the channel grow. And for those who want to help keep the channel financially sustainable, I rely on your support primarily to keep the channel going. Patreon and Buy Me a Coffee links are in the description below. As always, thank you so much everybody for the ongoing support. Next up, on Monday we covered Beijing's move to stop strategic investors from being allowed to lend out shares during agreed lockout periods. As we said at the time, this limit on short selling was unlikely to give stocks a sustainable boost as sentiment remains weak. In 2015, after all, China restricted short selling to force out day traders. However, the market continued to slide in the following months. So far this week, we are seeing this play out again, both in the mainland and in Hong Kong, especially as more poor data on the Chinese economy is published. Today, Wednesday, the National Bureau of Statistics said that official PMI manufacturing index stood at 49.2 in January versus 49 in December, another month of contraction. This pushed Hong Kong stocks to their worst performance in 5 months, soon after the announcement. The Hang Seng Index fell more than 1% in morning trading, taking the decline for the month to over 8%, the worst since an 8.5% slump in August last year. The technology index dropped even more. A sell-off in Chinese stocks extended on Wednesday too. A key index, the CSI 300 benchmark for mainland shares, wiped out all the gains spurred by hopes of stronger support measures by the authorities on Monday. China's blue chip index, which earlier this month sank to its lowest point since 2019, was lower today and down roughly 6% for January, marking its sixth straight month of decline. Meanwhile, one of Asia's standouts, Japan's Nikkei 225, looks set to end the month with a more than 7% gain, its best January performance in over a decade. With China's stock market rout, it faces an uphill battle to regain investor trust. Incredibly, the MSCI China Index has fallen by about 17% since the end of 2013, a period that saw equity gauges in the US and India at least double. And of course, this is despite over a decade of official high growth rates in China. Something doesn't quite add up. Chinese financial media outlet Caixin writes this week that experts have diverging views on the current regulatory policies to stabilize the stock market. Quote, some call for a halt to IPOs, limits on selling by large shareholders, and the rapid establishment of a stabilization fund to buy shares. Others say it is necessary to respect the laws of the market and that the government shouldn't place too many restrictions on stock trading. End quote. Fred Hu, founder and chairman of private equity firm Primavera Capital and a former economist at the IMF, told Caixin this month in Davos, Switzerland, quote, rescuing the market is not a long-term solution. The focus should be on improving fundamentals and improving confidence. End quote. That is to say, fix the economy and the stock market will follow suit. Others agree. Quote, our view is that investor confidence cannot return until the property sector is finally fixed. Ongoing news flow confirms that the property crisis is still hot and not easy to resolve. Valuations are clearly cheap, but for good reasons, including self-inflicted damage to the tech and real estate sectors. End quote. Meanwhile, Chinese financial media outlet Yicai reports this week that due to the poor stock market performance, China's mutual funds racked up losses of almost $500 billion, $60.6 billion in 2023, the first time that the sector has lost money for 2 years running. In 2022, the losses were even higher at 1.4 trillion yuan. $202 billion. And finally, for this topic and today's video, US-based Wall Street Journal reports today that China's 10-year bond yield, a key China bond yield, slid below the psychologically important 2.5% level early on Tuesday, touching 2.47%, its lowest level since about 2002. It then clawed back some ground and was at last at 2.51%. Quote, analysts reckon the move reflects mounting hopes of more action from policymakers and a positive reaction to the central bank's recent steps in the wake of a bruising sell-off in Chinese stock markets. End quote. Morgan Stanley strategists writing in a note told clients this week, quote, this pattern of new lows in bond yields and resumption of declines in equities highlights to us that the market is concerned that stimulus is not sufficient to address the current deflationary environment. Our economists continue to argue that a major fiscal package targeting the consumer is needed. End quote. Of course, Beijing may fear that it no longer has enough fiscal room to do this. The next few months will be critical. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a good Wednesday, and I will see you all tomorrow.